Hi and Assalamualaikum. I'm Sarahani binti Fazil, metric number 2021190029 from class BA 243-2B. I will be presenting on the financial ratio for the companies of MHC Plantation BHD and Ribunan Sawit Berhad for the year 2018 to 2020. MHC Plantation BHD is a public company that engages in palm oil production, oil processing, investment management and hotel operation. Ribunan Sawit Berhad is an investment holding firm that continues to develop the oil palm, operate palm oil mills and provide management service. Financial ratio are the tools to measure the company's performance and compare it with other similar businesses in their industry. Liquidity ratio is used to determine a company's ability to pay its short-term obligation. Higher the ratio are better as they represent the higher ability of a firm to cover its obligation. The most common measure is current ratio and quick ratio. Current ratio measures the ability of a company to pay short-term obligation with the current assets within 1 year. The current ratio can be calculated by dividing the current assets with the current liabilities. Meanwhile, the quick ratio measures the ability of a company to pay its short-term obligation with the most liquid assets. It can be calculated by deducting the current assets with inventory and dividing it with the current liabilities. Graph 1 shows the current ratio for both companies for these 3 years. The current ratio of MHC Plantation BHD and Ribunan Sawit Berhad has decreased from year 2018 to 2019 and then increased in 2020. With the current ratio of 1 times, MHC Plantation BHD has 1 ringgit of current assets to pay its 1 ringgit current liabilities. It is a good ratio as it shows that this company can meet the short-term obligation within a year. Meanwhile, Ribunan Sawit Berhad recorded 0.16 times, which means that the company has only 60 cents of current assets to pay its 1 ringgit current liabilities. This indicates that the company's current assets were less valuable than its current liabilities. Graph 2 shows the quick ratio of MHC Plantation, which remains stable over these 3 years, while the quick ratio of Ribunan Sawit has decreased from year 2018 to 2019 and then increased in 2020. MHC Plantation significantly outperformed Ribunan Sawit with a quick ratio of 0.81 times versus 0.10 times. It shows that MHC Plantation has 81 cents in liquid assets to cover its 1 ringgit in current liabilities. The company has enough cash to pay its short-term financial obligation. Meanwhile, Ribunan Sawit has 10 cents of the most liquid assets to pay its 1 ringgit current liabilities. This indicates that the company's assets cannot be converted to cash quickly, since the company's current assets are insufficient due on the company's current liabilities. The efficiency ratio are used to assess how successfully a company uses its assets and manages its liabilities. A higher ratio is desirable as it indicates a greater efficiency of a company. So there are 2 ratios that we calculate under the efficiency ratio, which are inventory turnover ratio and average collection period. The inventory turnover ratio refers to how many times a company's inventory is sold and replaced in a certain period of time. It can be calculated by dividing the cost of goods sold with the inventory. Furthermore, average collection period is the average amount of time it takes a company to collect its obligation from creditors. So the formula is account receivable divided by total sale and multiplied by 360 days. Graph 3 shows the inventory turnover ratio for both companies. The ratio for MHC Plantation has increasing over these 3 years. Overall, Ribunan Sawit shows the most efficient company in managing its inventory since the ratio recorded the highest for this 3 years financial ratio. However, a fluctuation inventory turnover ratio could be a sign of a poor management or inefficient purchasing practice. In 2020, Ribunan Sawit had the greatest inventory turnover ratio of 19.54 times, means the company has replaced the inventory 20 times in the last year. Meanwhile, MHC Plantation had only 16.52 times, indicate that they replaced the inventory 70 times a year. The company might have a declining demand for the company's product resulted in the low inventory turnover. Graph 4 shows the average collection period for MHC Plantation, which has rose and fell from 2018 to 2020, while Ribunan Sawit has reduced for these 3 years. In 2020, Ribunan Sawit had the shortest average collection period compared to MHC Plantation at 18.95 and 23.37 times respectively. This means that the company's ability to collect the debts from its account receivable in just 19 days. Meanwhile, MHC Plantation takes 23 days to receive the payment from its clients. Therefore, Ribunan Sawit Berhad is faster in collecting the account receivable. The leverage ratio is used to determine a firm's ability to meet the long-term debt obligation. The high ratio will result in the higher risk because the firm is subjected to the higher fixed payment obligation and thus will reduce their profit. The debt ratio and the debt to equity ratio are the two most important leverage ratio. Debt ratio measures the amount of percentage of total asset being financed by debt or liabilities. It can be calculated by dividing the total liabilities with the total asset and multiply by 100%. Meanwhile, the debt to equity ratio indicates the extent where the debt financing is used compared to equity financing. This can be calculated by dividing the long-term debt with the total equity. Graph 5 shows the debt ratio for MHC Plantation and Rimbunan Sawit that has increased from year 2018 to 2019 and then dropped in year 2020. MHC Plantation had the lowest debt ratio at 27.89%. This company liabilities amount for only 28% of its entire assets. Their debt level is considered low risk as they have less total debt. Rimbunan Sawit, on the other hand, is heavily leveraged with a debt ratio of 59.83%, indicating that its liabilities represent 60% of its total assets. Graph 6 shows the debt to equity ratio for MHC Plantation, which remained unchanged over the past 3 years, while Rimbunan Sawit has decreased from year 2018 to 2019 and increased in year 2020. MHC Plantation recorded the debt to equity ratio at 0.20 times, implying that for every 1 ringgit of equity, the business used 20 cents of debt to finance the asset. The company has the lowest debt to equity ratio, indicating that it has less debt on its record. Meanwhile, Rimbunan Sawit BERHAD has the highest debt to equity of 0.68 times, implying that for every 1 ringgit of equity, the business used 68 cents of debt to finance the assets. A higher ratio than the industry average may find it difficult to get the extra financing and it may be forced to be default. In conclusion, MHC Plantation did a decent job of acquiring the financing for its operation because their debt to equity ratio maintained at the lowest average. Profitability ratio is used to measure and evaluate the firm's ability to create the income of profits. A higher ratio indicates the higher ability of a firm to obtain the profit. So gross profit margin and net profit margin are the two of the most important profitability ratio. The gross profit margin measures the efficiency of the firm's operation to produce profit. It can be calculated by dividing the gross profit with the sales and multiply by 100. The net profit margin measures the percentage of the sales revenue retained by the company after the operating expenses, interest and tax that have been paid. This can be calculated by dividing the net profit with sales and multiply by 100. Graph 7 shows the gross profit margin for both companies for these 3 years. In 2020, MHC Plantation had the largest gross profit margin at 13.65%, which means for every 100 in net sales, the companies earned 13 ringgit 65 cents of gross profit. Compared to Rimbunan Sawit BERHAD at 6.35% shows that for every 100 of net sale earned from selling items, the gross profit margin is 6 ringgit 35 cents. In conclusion, MHC Plantation is a well-managed company with a higher gross profit margin. Graph 8 shows the net profit margin for both companies. Over the past 3 years, MHC Plantation has a better net profit margin. In 2020, the company have the greatest net profit margin at 6.34%, which means every 100 ringgit net sales, the company earned 6 ringgit 34% of net profit, and the remaining was total operating expenses, interest and tax. Meanwhile, Rimbunan Sawit had a terrible performance with a net profit margin of negative 14.54%, which means for every 100 net sales, company earned 14 ringgit 54% of net profit. The negative net profit margin shows that the revenue generated from the sale of a product or service is insufficient to pay the cost of producing goods or service. Therefore, it can be concluded that MHC Plantation BHD is a better option for lenders and investors because the company is more liquidity since its current ratio is close to 1, meaning that this company can convert the current assets to cash quickly enough to meet its current liabilities. Based on the efficiency ratio, the company was the most efficient because they frequently selling the stock to generate sales and revenue. Moreover, in terms of leverage ratio, the debt to equity ratio of the company is less than 40%. Lenders and investors favor companies with a lower leverage ratio since it suggests that the company is more creditworthy and financially sound in the long run. Similarly, MHC Plantation BHD is superior in terms of profitability ratio because the company recorded the highest gross profit margin, indicate that the business are able to produce more revenue. However, Rimbunan Sawit Berhad needs to increase its efficiency in a variety of ways. Firstly, to increase its liquidity ratio, Rimbunan Sawit Berhad needs to cut its overhead expenses like rent, advertising and indirect costs. Thus, the company's short-term expenses will be reduced as the organizations are able to save more money. Second, they need to enhance the inventory turnover since it's fluctuated during the 3 years of the financial statement, either by focusing on improved sale or by lowering the funds blocked on stocks. Next, they should control or reduce its leverage ratio by monitoring the collection debts and effectively employing the credit to keep the leverage ratio at a manageable level. And finally, they should boost its profit margin by cutting the operating costs, increasing sales volume or raising the product price. By following this suggestion, Rimbunan Sawit Berhad will have a good financial profit and well known by all the lenders and investors. So I think that's all for me for this video. Thank you for your time and Assalamualaikum.